Ever wondered how much oil you use in a day? Or how that could translate into an investment opportunity? You see, oil isn't just what fuels our cars or heats our homes. It's in everything from the plastic of your morning coffee cup to the synthetic fibers of your favorite sweater. It's almost impossible to go through a day without using a product made from oil. Your daily life is more closely linked to oil than you might think. Now imagine the potential of investing in such an essential resource. But how does one invest in oil? Let's dive into it. Oil investments are like taking a journey into the heart of the world's economy, where the black gold, as it's often called, fuels not only our vehicles but also a wide array of industries. Investing in oil, therefore, can be seen as owning a part of this global economic engine. Now, there are several ways you can invest in oil. Let's start with the most direct approach: buying stocks in oil companies. This is like becoming a partial owner of these companies. When they profit, you profit. You can invest in multinational corporations that have a hand in every aspect of oil production, from exploration to refinement, or you can opt for smaller companies that specialize in certain areas. Next, we have exchange-traded funds, or ETFs for short. These are investment funds traded on stock exchanges, much like individual stocks. An oil ETF specifically might invest in oil company stocks, futures contracts, or both. It's like a pre-packaged collection of oil investments that can offer diversification and ease of management. Then there's the futures market. This is where things get a bit more complex. In a nutshell, buying an oil futures contract means you're agreeing to buy a certain amount of oil at a specified price on a set date. It's a bit like making a bet on the future price of oil. This can be highly profitable, but also carries a higher risk. Let's not forget about mutual funds and index funds, which pool money from many investors to buy a diversified portfolio of stocks or other investments. Some of these funds focus on the energy sector, including oil. Lastly, there are options for the more adventurous. These include investing in oil drilling projects or buying land with oil reserves. These can offer substantial returns but are also higher risk and require more knowledge and involvement. So as you see, investing in oil isn't just for the big players. With these avenues, anyone can get a slice of the oil pie. Scene script. Every investment has its pros and cons, and oil is no exception. Diving straight into the juicy part, let's talk about the advantages of oil investments. One of the most appealing aspects of investing in oil is, without a doubt, the potential for high returns. Oil is a commodity that powers the world, and as such, its demand is consistently high. When supply tightens or geopolitical events cause disruptions, prices can surge, leading to substantial profits for those holding oil investments. Another advantage is portfolio diversification. Commodities like oil can provide a buffer against volatility in other sectors like equities or bonds. When stock markets are shaky, commodities often remain steady or even increase in value. By including oil in your portfolio, you're essentially spreading your eggs across different baskets, reducing the risk of significant losses. Now let's get serious and discuss the risks involved. One of the biggest challenges with oil investments is market volatility. Oil prices can fluctuate wildly due to a multitude of factors, everything from changes in global economic health to shifts in production levels to natural disasters. This volatility can result in rapid changes in the value of your investments, sometimes in a matter of hours. Geopolitical factors also play a significant role in the oil market. The majority of the world's oil reserves are located in regions with unstable political climates. Conflicts, sanctions, or changes in governance can impact oil production and export, thereby affecting the global oil prices. When investing in oil, you're not just betting on the commodity itself, but also on the stability of the regions where it's produced. Lastly, there are environmental concerns. The production and consumption of oil contribute to global warming, and as the world shifts towards cleaner energy sources, the demand for oil may decrease over time. This could potentially impact the long-term profitability of oil investments. Moreover, oil companies are facing increasing regulatory pressure and reputational risks related to environmental issues, which could affect their stock prices. Despite these risks, oil investments can still be a viable option for savvy investors. The key is to understand the market, stay informed about global events, and be prepared for the possibility of sudden price changes. It's also crucial to consider the ethical and environmental implications of your investment choices. Weighing the pros and cons is crucial before making any investment decision. Oil investments can be a lucrative venture, but they are not without risks. Understanding these risks and rewards can help you make informed decisions and potentially reap substantial returns. So keep your eyes peeled, your mind sharp, and your investment portfolio diversified. The question that remains is, what does the future hold for oil? As we stare into the crystal ball of the oil industry, several key factors come into focus. One of the most prominent is the global shift towards renewable energy. Countries around the world are increasingly investing in wind, solar, and hydroelectric power, driven by concerns about climate change and the desire for energy independence. This transition is likely to reduce the demand for oil in the long term. However, oil is not going down without a fight. Innovations in technology are making oil extraction more efficient and less environmentally damaging. Enhanced oil recovery techniques are squeezing more oil out of existing wells, reducing the need for new drilling. At the same time, advances in drilling technology are unlocking oil reserves that were previously inaccessible, potentially increasing the global oil supply. Another factor to consider is the global demand for oil. Despite the rise of renewable energy, oil remains a crucial part of the global economy. It's not just about fueling cars and heating homes. Oil is also a key ingredient in products ranging from plastic to pharmaceuticals. As developing countries continue to industrialize, their demand for oil is expected to rise, potentially offsetting some of the decline in demand from developed nations. However, predicting the future of oil is not an exact science. It's influenced by a complex web of factors, from geopolitical tensions to economic cycles, from technological breakthroughs to environmental policies. As such, any forecast should be taken with a grain of salt. Despite the uncertainties, one thing is clear: oil is not going away anytime soon. It continues to be a major player in the global economy, and its fortunes will have far-reaching implications for investors, consumers, and the planet as a whole. The future of oil is uncertain, but it continues to be a significant player in the global economy. So, we've covered quite a bit about oil investments. From the outset, we delved into understanding your oil footprint, which is the first step to recognizing the pervasive influence of oil in our daily lives. Oil isn't just about fueling our vehicles or heating our homes. It's a vital component in countless products we use every day, from the plastic items we casually toss into our shopping carts to the asphalt under our tires as we drive home. We then moved on to unearthing the basics of oil investments. Investing in oil isn't as straightforward as buying a stock or a bond. It's a multifaceted arena, with a range of investment avenues from crude oil futures and oil ETFs to investing in oil companies and oilfield service businesses. Each comes with its unique set of risks and rewards, and understanding these is paramount to making informed decisions. Next, we weighed the pros and cons of oil investments. On the upside, oil can offer lucrative returns and act as a hedge against inflation. On the downside, it's a volatile market subject to geopolitical tensions, environmental concerns, and technological advancements. The key takeaway here is that while oil investments can be profitable, they're not for the faint-hearted. Risk management, therefore, should be a crucial part of your investment strategy. And finally, we peered into the crystal ball to explore the future of oil. While renewable energy resources are gaining traction, oil isn't going anywhere anytime soon. The global demand for oil remains robust, and it's expected to stay that way for the foreseeable future. However, the landscape is evolving. The oil industry of tomorrow may look markedly different from today, with energy transition and technological innovation reshaping the contours of the market. And there you have it, the world of oil investments in a nutshell. But remember, this video is just a primer. If you're considering dipping your toes into the oil market, I strongly encourage you to delve deeper. Research, learn, and equip yourself with knowledge so that you're not just riding the waves, but steering your own ship. Remember, an informed investor is a successful investor. So the next time you fill up your gas tank or use a plastic item, think about the potential investment opportunity that lies within.